Hi, this is jeng with Old Capital, and today I am here with Jakob Andersen of Newmark. Jacob, welcome to the show, and let's go through maybe a little bit about your background, and then we'll jump into this deal called Sunset Heights.
Absolutely. Thank you so much, James, for having me here today. So again, my name is Jakob Andersen. And I am a part of the Newmark team in Dallas-Fort Worth. We are a shop that's exclusively focused on multifamily in DFW and secondary markets in and around Dallas and Fort Worth. We typically produce between 1.5 and $2 billion a year in assets. I've been in the business now the last 15 years, and with this group the past 10.
All right, so we're going to jump into a deal called Sunset Heights. I pulled up a map of the location. Maybe give us sort of the high level of where this deal sits in the DFW metro.
Absolutely. So you have the little dot over there where Sunset Heights is located. So you are sitting just about 10 minutes outside downtown Fort Worth on the west side, and you're sitting about 45 seconds away from the relative newly constructed Chisholm Trail toll road that goes from Fort Worth and down south. So you're sitting in a part of Fort Worth that has seen a lot of new development, multifamily, and also retail, which we will get into a little bit on some of the next couple of slides.
All right, here we go. So I pulled, this is out of your OM, just sort of an aerial, maybe started on the left-hand side, looking northeast. You can see sort of downtown Fort Worth, and then some of the surrounding retail right here. So maybe touch on what has, because of Chisholm Trail, I mean, what has developed around this property?
Absolutely. So again, you see in the background Fort Worth downtown, and again, you are sitting, depending on traffic these days, probably about 8 to 10 minutes out. But more importantly, the Hewlin corridor that starts, if you take a 30 and that intersection and goes all the way down to 20, that's one of the major corridors where we've seen a lot of development. And to be more specific on this location, you have a very well-established higher end retail center that sits on the hard corner of Hewlin and I-30. It's anchored by Whole Foods and Container Store and Walmart. So really, really good tenants that are actually in walking distance of Sunset. And if we go to the other side, the other area, and here we are looking south from the property, right on the other side of the railroad tracks, we have Clearfork, which is one of the largest developments, infill developments in Dallas-Fort Worth. And what you got there is a mix between corporate headquarters, retail, new apartments, trail systems, whatnot. It has not been built out yet, but as you can see on the little label there, we already have tenants such as Tesla, Louis Vuitton, Burberry, Neiman Marcus in there. So that will be, and it is already, a big catalyst for the surrounding areas and the redevelopment.
Okay. I think so. The property just north on Hewlin and I-30, that's the Central Market. But I think there's a Whole Foods just south of the property, probably along Chisholm Trail.
Yeah, I apologize.
Yeah.
You are
Okay.
absolutely correct.
Okay.
You're absolutely correct.
But I like Central Market just as much as Whole Foods. So it's, to me, it's a win-win. Yeah, it's a win-win. So, all right. So great location, just outside of sort of Fort Worth on the right side of town and close to a lot of drivers. So maybe talk about sort of the overall feel of the property and sort of what the overall sort of occupancy and rents are now at the property.
Yes, absolutely. So you have 91 units. In respect to a lot of the comps around, this is actually a relative big unit size. So you're sitting at 807 average square foot units. The deal is currently in the mid 90s occupied, and it has stayed very steady and continue to be steady. When talking to the manager in place, for August here and also September, you are looking at being right around 95 to 100% occupied going forward for the foreseeable future.
Okay. And then, so let's just jump into maybe go through some of the characteristics on the property. Property was built in 1970. Maybe talk about if any sort of recent upgrades to the property in terms of whether it's the roof or the HVAC, hot water, any of that stuff.
Yes. So the property has been pretty steady over the last couple of years here. The current ownership has added some carports to the property and painted. They have not gone overboard on any type of value add, and I think if you would go see it, you would agree with me. It's very much in the middle of fairway, which creates the opportunity for the next person to go in and execute that, especially with the single family market around it and the overall market, as we just talked about on the aerials.
Okay, and then so how's it being managed now, the current property?
So right now it is third-party managed, and personnel-wise, as you have highlighted here, it is one person in the office and one maintenance man. And from the feedback is that that's a really good match for this property. One inside the office, one outside, and that's plenty.
Okay. All right. So here's some pictures of the interiors. So this is pretty much all the units look like this, or a majority of the units look like this.
Yes, more or less. Yes.
Okay. So in terms of flooring, they've done some of the flooring, but then there's still a lot left to be done, really around appliances, countertops, backsplashes, and things like that. Anything else here on this slide?
No, and you're absolutely right. The majority looks like this. I've seen different variations of tiles in the back in the bathrooms, and I've seen some units with frame mirrors, some without frame mirrors, but it's a little bit more sporadic. But overall, this is how the units they look like. They still have some long-term tenants that occupies units, where I will say about 20 of the 91, they will be more in a classic stage.
Okay. All right. So this next slide, we show some of the competing properties and sort of what they're doing on the interiors to take it up to the next level. So maybe talk through some of these comps.
Yeah, so we picked a couple of the neighbors here. Hewland Park Place, that sits in walking distance from Sunset Heights, right behind it in the neighborhood. Slate, that sits right across the street from Sunset Heights, and then the Heights, that sits probably about a 6 to 8 minute drive away from the property. All of these, what's characteristics around it, they have gone in with some hard surfaces, some backsplash, made the unit pop more so than Sunset Heights currently is showing.
All right, so so countertops, maybe some backsplash, some new appliances, and maybe some fixtures to really give it that next level. And so here on this chart, we threw out some of the rent comps and put some on here. So rent's sitting right now about 887. You think market rent is about 950. And so from that market rent, there's even more room north of that. Maybe talk through some of these comps that we put on the sheet.
Correct. And specifically, one thing to point out here, again, with the square footage on Sunset Heights, you're sitting at 807. And right across the street at Slate, you are sitting at a smaller unit at 674. That is one of the things that they have provided me a feedback from the property, that the bigger unit size really helped their leasing. They can't compete on the finish outs right now, but the bigger unit size is what's leasing it. Now, I think in the perfect world, and probably for the next people that own Sunset Heights, it would be to combine those two worlds and get up closer to, instead of $1.18 of market rent at Sunset, get closer to that $1.40, which is the average of the comp set.
All right. So so coming in, doing some of the upgrades on the interiors, a lot of the flooring is done. So really just appliances. maybe 4 to 5,000 a unit on the interiors. That year one, you think how much more you think we can get on rental income in your pro forma that you have here?
Yeah, so we put in upgrade potential 23,400. What we were a little bit conservative on is how many units you can get into since we have been in COVID. So we modeled 2 to 3 a month. So it will take you a little longer to go through the implementation. And what we have put in is between $100 and $150 in rent bumps across the board.
All right. So once you get those interior upgrades done, you're able to increase the rents. And then right now the expenses are pretty where you think they're going to stay, right? Like there's nothing really on the expense side that you're seeing that different compared to T12.
No, I think the expenses are pretty much in line. Typically, what we see is on the personnel side, you can maybe take one person out here. It is a 1-1 operation, and I would think tomorrow it would be a 1-1 operation too.
So we need to work on that technology, and on some of these smaller deals, we're seeing people use some of the virtual stuff to maybe minimize that or have someone part-time. But yeah, 1-1 is, I think, a good sort of budget to put in for now, just to keep all those tenants happy. So let's did you have a whisper price on this deal yet?
We do. So our whisper price on Sunset is $10 million.
Okay.
And that flows into, and thank you so much for providing these debt options. And maybe, James, you can take us kind of through the various ones.
Yes, I mean, we looked at it a couple different ways. So Fannie Mae on this size deal, it sort of sits in between Freddie's SBL program and Freddie's conventional program, right? In that usually on the SBL, it sort of caps at 6 million, and then conventional starts at 7.5. So this one is sort of in between. So we've done some smaller Freddie conventional loans, but we just quoted this Fannie for now. So Fannie Mae has a great program. They're sizing it right around 6.7 million, and you're going to be anywhere from 325 to 375, depending on if you choose step down prepayment or yield maintenance. So that's the first option, Fannie Mae. Second option is sort of on your non-recourse bridge. So non-recourse bridge, we're seeing deals go up to 80% of purchase price plus 100% of CapEx. And those are about 3.5 to 4%. And then if you go a little bit lower leverage, you might be in the 325 to 375 range. And those are going to be sort of your starting rate. And it's going to float across the 3 years, but then you have a 1% prepay. And so if you decide to refinance or sell the asset, then you're only out with 1%. So both, these three options, I think, work for majority of the investors, but happy to, if you have any questions about these, let me know and we can dig into your specific situation a little bit more. Jacob, do you have a call for offers date yet on this deal?
We do. We are aiming to collect offers here in about 2 weeks. It will be on August 24th. So if you have interest after looking at this and gone to our website to look at financials and rent roll, feel free to reach out, and I will be more than happy to meet you over there to tour the actual asset.
All right. Thank you very much, Jacob. Any final comments? I always like to give people the final say here, just wrapping up on this deal.
Yes, to go back to your slide on the loan options, we are very fortunate right now and seeing a very good LTV put in place and have multiple avenues with Fannie Mae and Freddie Mac, and also bridge lenders that are willing to lend on it at still extremely low interest rates, being the low 3s to up towards the high 3s. On a deal like this here, coming into a great cash flow, when we underwrite it, we are looking at above a 5 cap rate on the deal. It gives an investor a great start with working cash flow, opportunity to upgrade units, and secure for the majority of the capital stack an extremely good interest rate.
All right. Well, I appreciate you coming on, Jacob, and
Absolutely.
we'll have people reach out to you to set up tours from here.
Sounds good. I appreciate it, James.
All right. Thanks a lot, Jacob.
Thanks.